Well, hello, traders and investors. I'm L.A. Little, and this is your weekly NeoTA wrap. We take a look at these markets, doing it from a neoclassical perspective. That means each time we're asking ourselves what happened last week, what might it tell us about the coming ones. Do the show once a week, every Sunday evening, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube, and it's under the channel L.A. Little. If you haven't subscribed and you want to, just reach up in the right-hand corner and do so. Anytime I push public content, you'll get a notification. As far as what did happen, here's the numbers. Up last week, 1% on the Russell, 0.5% elsewhere. Healthy gains for the year. Question is, will they continue? And if you look at it on a Friday note, big nice gains posted for Friday. 1% on the Russell, that was the weekly gain. 0.5% here on the NASDAQ, also what ended up being the weekly gain. Same thing on the S&P. So essentially, you went flat all week, and then you got your gains on Friday. Big pop up in gold and silver. Last Wednesday, I highlighted the fact that we had made a positional trade in the markets. As told you, I would reflect on that as time passed. Well, we told you on Thursday that we actually used the gold, GDX and GLD as trading vehicles. Made some nice gains on those pops. As far as elsewhere, bonds down a little bit. The dollar was slightly up, and actually I don't have the dollar on here. We had big gains over in Europe. I want to highlight a little bit of that. And then, in general, it's just a positive reflection on what's going on. And though I'm not at liberty to show you our current trades here, you can see we're up smartly on the year. You can see the big gains we got at the end of the week there on those trades, in addition to the existing portfolio, almost at the new highs. One of the things I always tell members is that you need about 2 to 3% drawdown at most. You don't want to allow more than that. That's about as much as you want to get down. The drawdown here, not that much. We want to keep our portfolio near the all-time highs, because if you're there and you protect your drawdowns, then you can always make higher and higher portfolio value, and that's what the ideal is. We're holding good gains on the year, and we're expecting to continue to push higher on those gains. Tonight I'm going to start the show over in Europe, and the reason for that is we do have the ECB coming up, and we do see a nice breakout taking place here on the CACs. So the French CACs getting a nice breakout. We don't have much volume this summer. Volume's been really low, but a little bit of push up the last 2 or 3 days. You got a breakout on the daily. You've also got a breakout taking place on the weekly. If we bring the weekly over, we can see the breakout there as well. Trend transition here. You break over swing point high. This thing's going to try to push into the next set of numbers. Now, there is overhead resistance, so even though we have multiple swing point breakouts, you don't have far to travel before you hit the next resistance areas. That's the one caveat on multiple swing point breakouts you have to pay attention to, but still, nonetheless, a nice big push up in the CACs. If we look at the FTSE had drifted back in, big spike up on Friday. If we look at the DAX also coming back up, held on that big bar test. That low we talked about last week, 10,701, got as low as 10,441. That low again was 10,433. So we got almost to it, didn't quite get to it, got a little hammer reversal, no volume. That leads to the gap up, fade back, and now a push back up. I like the way this one's shaping up. Held its retest regen at the highs. That's exactly what you want to see if you want to see a good strong push. And so you get the breakout, you get the little retest regen taking place right in that area. Now you're pushing again. Going to go attack the next set of levels is what this thing's going to try and do. So Europe looks to me like it's expecting QE. Looks to me like it's setting up for more QE. And that's true pretty much across the board. If we move over to Asia, I would point out Hong Kong. Hong Kong has now broken out. So you get a breakout over this high, volume escalation. Again, that's all the kinds of things that you want to see take place. That's going after, is targeting the next swing point high here and then the breakdown bar above it. So again, Hong Kong starting to show us a good traction. What does it all mean, right? I mean, well, Shanghai not so well off. Should have pushed higher on multiple swing point breakouts, big volume. It does come back and test it once, test again, volume still lower. I expect this is going to push again, but at the same time, they're pegged to the dollar. Dollar's stronger. A stronger dollar makes it harder for China proper to go higher. You can see the dollar tried to trade down on that employment number on Friday, but in fact ended up reversing, heading higher. The dollar's on track to go up and test into that higher range again. It did it before. Looks like it's going to try and do it again. That was that range up there versus this range down here. I think that's the area that's going to get attacked again. How's it going to do it? Well, if the euro is going to be devalued, that's certainly going to have a big piece of it, and we may see that take place this week. Switching over to our own markets, equity markets domestically, let's take a look at what those look like. So let me grab those charts. And where are they? General markets. So we had more consolidation last week. So a little push up at the end of the week. Outside of that, consolidations. It pressed down into the swing point low. Did it 3 times testing. Never could change trend. In other words, couldn't transition below it. Gets a little pop up on Friday. No volume. Still just a range trade to me. If I look back on the weekly, still looks quite well overall. NASDAQ, NDX, both look about the same. There they are. There's the range on it and continuation on the top side. The one that's been exhibiting the most strength has been the Russell. Now, all the others we're talking about ranges, right? Well, I guess we could talk about this range in the Russell and the range that was below it. Let's try that again. So we have this range up here, right? Then you kind of had a little range below it. And if you just kind of draw these out, the feeling that you get here is one of a stair-stepping higher. The Russell's the only one doing this consistently, just stair-stepping higher and higher. Got a breakout on Friday. We'll see if that can make another new range up above. I like the way equities continue to look. Can they set back? Sure they can. Are they going to? No guarantee they will. You've had a long consolidation, 2 months now on the S&P. 2 months is plenty of time to work out whatever the excesses were and allow this thing to continue. If it does pull back, in my opinion, just as I've told you before, it's probably going to be a buy. And you're going to want to measure up where those places are. I've pointed those places out to members. Either become a member or figure it out yourself, I guess is all I have to say, because there is going to be an opportunity. Don't look at this market pessimistically. Look at the price action. It's telling you what you want to see. Market's bullish. You need to be bullish too. You need to deploy capital. You saw the portfolio, the way the capital was deployed. Yeah, we've got some cash on hand. We'll deploy it as necessary if we pull back. But if we don't, we're positioned to make more money on the upside, and that's where you need to be as well. That's the weekly wrap. Have a great one. Have a great holiday. I will be taking Monday off, and I'll be back with you Tuesday evening. Take care. Good night.